Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are taking a look at the macro retest of the range high of the high time frame descending channel formation. We are going to be discussing the probabilities of a breakout, the expected targets, and even the possibility of a correction as we have seen numerous times in the past. Will Bitcoin continue upwards, or are we going to see history repeat itself? We're going to be diving deep into the macro, the weekly, and the short-term charts to uncover the truth about what is likely to occur next. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our trading setups. You'll get access to our group chats, our general chat, our trading chart and education chat, our news, daily video help, and trade setup chat. So much stuff to get access to. Go ahead and contact me in the pinned comment of the free channel by clicking my name right over here, or these links for more information. Let's go ahead, guys, and jump on in. So it almost seems surreal that Bitcoin is yet again at the range high of the channel, and it definitely feels surreal that this time may be the time we potentially see a breakout. And if we take a look at the prior 5 retests and rejections from this trend line, a thing in common in those instances were that the momentum on the weekly chart was in fact negative. We had overall weakness, meaning we were testing the upper range high from a position of weakness as per the falling RSI. Again, an indication of momentum, as opposed to strength, which we are now retesting the range high from. So there is a slight variation here. There's a difference in the overall strength behind this move as opposed to what we saw on these prior retests, will significantly impact the probabilities of a sustained breakout. Now, we're going to be discussing the likelihood of this occurring, possible directional moves that could develop from the range high, and of course, even the possibility of a correction and what a potential pullback could actually look like. Now, if you have been following the channel, guys, you would have known I was probably the only person out there who actually publicly stated very clearly that I believe the bottom was at 47 to 49. I said right over here, I believe this is the bottom, 47 to 49k, and since then we saw a fantastic move. That is like a 35% rally for Bitcoin, 37% rally for Bitcoin, so congratulations if you paid attention to that. Now, I have also been saying that during this move upwards, I've stated numerous times that I believe the next retest of the range high will be the one that results in a breakout. So we're going to talk about that in today's video. So let's move over. We're going to be discussing the short term as well, what is happening. We're going to be jumping over to the weekly, of course, the technical levels. We're going to be discussing everything. So let's start on the market data. 24-hour volume down 31%, 146 billion, quite surprising. Liquidations down 56%, 138 million, 73 million in longs, 55 million in shorts, as Bitcoin has been moving sideways now for 24 hours at this range high. Moving over to the DXY, still seeing the DXY move upwards. As we have stated, we are watching for a retest of the change of character. From this point, we are watching for a rejection. We are expecting that rejection to take us back into this low, possibly even triggering the multi-month downtrend for the DXY to initiate. A break over the change of character, which is going to be this red level of resistance, we would then expect a move upwards into this range high. This would, of course, be bearish for Bitcoin. We are expecting this route to take place. Moving over to the S&P 500, very close to 6,000. creating another brand new all-time high at $5,918. Fantastic. Yet again, expecting macro continuations to continue upwards to 6,000, provided these weekly highs are able to hold. And if we do drop below those weekly highs, expect a macro correction to our yearly lows. We can see we do have a potential inverted hammer candle developing here on the weekly. Something to pay close attention to, of course, that could mark a weekly high or a short-term pullback developing into the new week if this candle does close out bearish. However, I do not believe that to be a likely scenario. As you know, I am bullish. I've been expecting the price to go up to 6,000 ever since. When was it? Back at April 2023, we have been expecting 6,000. I stand by my targets until they are reached or the macro trend changes. And for now, the macro trend is bullish, so that is where we'll remain. Moving over to Bitcoin, guys, like we said, a lot is going on in the short term, a lot is going on the macro, and a whole heap is going on the daily. This is probably the most pivotal retest we have seen to Bitcoin ever since the retest on the 8th of September at the range low. So a lot to discuss. Before we get into it, guys, make sure to support me, support the videos, and support yourself in your trading journey. 15% permanent discount on all your trading fees. That is an awesome return over there. Sign up to BitGet, BitUnix, or BingX with the links down below to get that bonus. It has saved me well over 6 figures, and it will save you a lot in the long run. Do not underestimate what that small percentage bonus makes. It makes a big difference. 15% off. Use the links down below. We'll play an ad and we'll jump into the analysis. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, welcome back. Let's get into the analysis, and in today's video we are starting on the higher time frame and then pegging it down to the daily and then to the short-term charts. So let's first and foremost take a look at the monthly charts, and this is a bit of perspective I want to shine onto everyone watching this video. A lot of people have been going on about how we're in a bear market, how the bull market's over, yada yada yada, but I want to go ahead and show you this chart. It's a very simple chart. It shows you the performance of Bitcoin since we officially entered the accumulation phase, or officially when we end the bear market. And if we look at when we end the bear market, we can use a very handy indicator. This is one I devised myself, a strategy I found myself. I look at the 2-week close below the lower band of Ichimoku cloud with the baseline of the Ichimoku cloud. If we look at when that occurs, that in all prior cycles have marked the exact bottom for Bitcoin. That is how we were able to purchase Bitcoin at 16.5K. We were able to get our entries at 16.5K solely on this indicator, a 2-week close below, marking the bottom for Bitcoin at 16.5K. So we know that since that point, the bottom has been in, and we have been developing an uptrend. The macro bull market initiated when the yearly bear market resistance broke at 30,000, resulting in a continuation to 48 and then to a all-time high. If we take a look at the price action over the course of the last year and a half, year and a bit, nearly 2 years, Bitcoin has more or less moved up 333%. Over the last 8 months in the descending channel formation, we have moved down around 17% to a max. And if we look at the monthly change at the moment, we are down around 5% from those monthly highs. So a lot of people saying we're in a bear market they're just factually incorrect. Bitcoin is in a consolidation period in a macro bull run. And there's nothing more I can really say to change the minds of people who are emotional, and I don't believe anyone should try change the minds of people who are emotional. Our job as traders, and definitely my job as someone who has a public eye, is not to try change your mind. It is to try give you information, and you can use that information however you please, however you see fit, because I'm going to make my decisions, you're going to make your decisions, and everyone's entitled to their own opinion. But when we're looking at facts, where some things are objective facts, Bitcoin is simply not in a bear market. It is simple as that. And you're probably saying, well, Whale, it's easy to say that now when Bitcoin's up at the range high, but I've been saying this entire time. I've been looking at these longs and these lows. If you take a look at my actual trades, such as in VIP, my real trades over here, we have been looking for longs. We've been taking longs in these low points, these buy zones, because we've been expecting rebounds to those range highs. So we put our money where our mouth is. But if we look at, again, guys, those weekly charts, we can see another very important thing. The bear market is a great invalidation for the bull market, and that probably sounds very obvious in your head, but we can use bear market initiations as validations to when the potential top has already been printed. It is very hard to pinpoint the exact top, but it is actually quite easy to jump onto a downtrend and jump ship when that trend is beginning to establish. You can use indicators such as the Ichimoku cloud and the Gaussian channel to kind of get on at the start of when that macro downtrend begins. And with that statement, we can use those validations as invalidations of the current uptrend, and kind of using that logic to express that while these invalidations are not met, the price action is in an uptrend and shall continue in an uptrend until those validations are met. And that is kind of where we're standing at the moment. While these weekly validations are indicating we are bullish, we are expecting the price action to continue on the monthly higher and higher until these levels are invalidated, until these indicators trigger their macro sell signals, which have historically always led to macro downtrends. And you can say, well, we haven't seen this cycle play out like the last cycle. These indicators are not a measure of dates. They're not a measure of what we've seen in the past. They are measurements of strength, and strength can lead to reversal. So we take a look at these indicators, guys. We are looking at the Gaussian channel, the upper band of the Gaussian channel. We are looking at the upper cloud of the Ichimoku cloud. What we have seen in the past is after we break our bear market resistance. This is our bear market resistance. Yes, this is a yearly resistance, but this is our bear market resistance. Our bear market resistance, from the point of which we break the bear market resistance, we sit above the Ichimoku cloud and the Gaussian channel upper band, and when we break back below these levels, we enter a macro downtrend to our lows. We have seen that in the prior cycle, we have seen that in the cycle preceding our prior cycle, and we have even seen that in the first cycle. So we are technically not bearish on a macro sense until these levels are broken. And this leads me to my second point. The reason I do believe this is the chance of which Bitcoin is able to break upwards is because if we were to drop back to the range low, we would be making those breakdowns on those validation points, signifying the initiation of a potential macro downtrend. So I do not believe if we see a rejection, we are going to see a rejection back to the range low. I do not think that is going to happen. I do not think it is likely. I'll talk about what can cause that in a second, but I do not think it's likely. As I have stated numerous times, I believe this retest is the retest that is going to inevitably be resulting in a break of the descending channel. Will that take us to 100K? I do not think so. Will it take us up? Yes, it likely will. So let's talk about this macro descending channel, and let's talk about the bullish and bearish cases. First and foremost, bearish case, get out of the way. For us to see a correction, we need to see momentum flip negative. If we take a look at our RSI, this is our RSI, our uptrend, and if we take a look and segment the price action into two segments, we have segment 1 right over here, segment 2 right over here. So gray segment 1, and non-gray segment is segment 2. So we'll go ahead and just segment it off. What we can see right over here is a very distinct difference between the momentum. In segment 1, we had lower highs developing the entire way, okay, and we had lower lows developing the entire way. With that, we had momentum generally moving downwards. We can see that with the lower lows on the RSI. Again, lower lows, momentum falling lower. That changed at our 49K level when I called the bottom. What we have since seen then is that momentum has been establishing higher lows. With that, we have also been establishing higher lows and higher highs on the price action. This is an entirely different market environment to our past 5 months during this consolidation. This is a bullish environment, it's a representation of strength, and this is generally what we'll see at the end of consolidation ranges, which has statistical preferences for continuations upwards, such as descending channels. They are more likely to see continuations upwards. It is what we see. Looking at momentum, the RSI and the weekly have broken out. suggesting the momentum has flipped positive. Positive momentum on the weekly increases the probability of a directional continuation upwards, more so if we understand what a descending channel represents. Remember, a channel is not a channel because it is a slanted rectangle. Shapes don't matter, okay? They're just lines. It is what the buyers and sellers are doing during this particular period of time between the 19th or the 26th of November to the 14th of October. The actions and decisions of buyers and sellers have an influence on the price action. It results in these structural formations developing, and it paints a picture. It tells us a story. It means something. It is not just a descending channel. We can see is an expression of consolidation, and most importantly is an expression that the selling pressure during this period from this high has been dissipating during the length of this continuation as an expression of momentum turning positive. We generally see this near the end of the consolidation. From a technical perspective, if we excluded external factors, this price should more likely go up. Now, there is a chance we're correct because the market doesn't solely move on what is our technical suggesting. There is developing news that occurs. There is developing price action. It doesn't just move on historical data. So yes, things can occur. Black swan events can occur. News events can occur. Developments in Iran and Israel, those wars can develop. We can see new things happen. We can see manipulation. All these things can occur that can push the price down from the range high. But we cannot base our decisions on ifs. We have to base our decisions on what is statistically more likely, because over a long run, your results reflect on your decisions over a mass period of time, not just one trade. One trade means nothing. It is the net result over many, many trades. And if you're taking many, many trades with proper validations, you are more likely to be successful. So in my eyes, this is a good retest. It is not what we need to see for a continuation upwards, but it is a good retest. It is good to see that we are retesting a range high from a position of strength, not weakness. So let's talk about the breakout, and then we'll talk about the possibility of a correction and what that would look like. Because I do not expect an immediate green candle to the moon. Anyone who assumes I do is just They're just stretching. It doesn't make any sense, right? Price action moves with logic, not green gold candles to the moon. It happens sometimes, but it's very, very rare, and I don't think it's going to happen in this instance. So I would like to see a daily candle close. I've said it many times. I would like to see a daily candle close above the range high to suggest that this resistance is broken and the price action will continue upwards. A lot of people are going to skip that part. I would like to see a daily candle above the range high to suggest that this resistance, yes, this is resistance, this downtrending resistance to be broken. Until then, resistance is resistance until it is not. And I would be looking to take some profits on positions rather than aping into long positions right up here. Watch to see that breakout. Overall, it is looking strong. It is looking good. Only a break of this RSI in my eyes would now deviate from the strength. Only a breakdown of that RSI in my eyes would and potentially result in a breakdown back to a range low. Only a break of the RSI could invalidate the weekly technical levels. Until then, it is looking very, very solid. Moving over to, guys, let's move over to the short term. So as we said, there's a possibility for a correction, but even if we see a short-term correction, the high time frame influences of that is irrelevant. Like we said, for a correction to have high time frame influence, it would need to break this RSI trend line. So any correction develops where that RSI trend line is able to sustain, and these higher lows being developed are able to continue to print higher lows, it is unlikely we are going to see a high time frame sweep to the lows. Okay, so it's not too much point talking about the short term unless you're interested in scalp trading. At the moment, guys, we are looking at our prior highs. We're looking at 66,000, 66,400. This is now a support. If we're zooming out to our next target, if we're looking at resistances, we do have a dynamic resistance as represented by the diagonal trend line at the point at which we are retesting at 68. But the next level of resistance is 70, meaning if we are able to somehow break through this resistance, it is likely we'll see a relatively quick move into 70,000, and at that point we are going to then develop the price action and see what happens next. And that is it, guys. Thanks for tuning in. Have a fantastic day. Catch you guys in tomorrow's video. Hopefully we have a daily close above or even a daily close below. We'll know what happens. We're able to see and develop and be able to react a little bit better. So thanks for tuning in. Catch you guys in the next one. Bye.